Hey guys, what's going on? Sunday market breakdown essentially for the watch list for the week ahead. So essentially, just going to let you guys know what I have got on watch for next week. I did have a few messages regarding this, so I thought it'd be quite useful as well. And if you guys can find more value in it, obviously helps me help you. Um, Essentially, yeah, the DXY. So looking at the DXY for continuation to the upside, and just to let you know, there's a link in the description which basically has this all documented for you, which can basically just explain everything in detail for multiple time frames rather than you having to go back and watching it again. So just basically covering that, we have the DXY, which I'm looking at for continuation to the upside. It's a little bit in this corrective squeeze, so really and truly don't get too caught into this, because the bigger move is going to be when we tap into this area or this whole zone as a whole. This is where we're going to really be looking at, can we short from here to go all the way back down to here? If we do get continuation and we start moving higher, then we can look at those areas. So we are moving into a very, very interesting area to be looking for trades. So just keep that in mind when we are positioning ourselves, because there's going to be better trades ahead of us. It just requires a little bit more patience, and it could take another 2 weeks, it could take a week, it could even get there within a couple of days. We just have to be very, very patient, because what we see from time to time is that a lot of people start losing percentages over here, and then when price comes over here, they're not able to take advantage off that. Obviously, we don't have to take advantage right here. If you were to wait a little bit longer, which I would personally advise, if you're newer, is just wait for price to get there and then give you the confirmation. If we do drop back in, then we can look for continuations all the way on the run down here, and you'd have a beautiful sequence on the way down. Otherwise, if we get continuation to this side, where I would ideally be looking for something kind of just breaking above, creating continuation here, and then we're off, and then you have this section, you have this section, and you have another one, and then we're just continuing creating larger structures, and then that just happens to be a sequence. I don't think that would be the sequence. I think what we could potentially see is, we could see that big move now. Once that's confirmed and we have something like this where we push up, we get that confirmation, then we go, and then next thing you know, it just gets there. So anyway, for now, we'll keep it very simple. Looking at the 4, we're looking at continuation to the upside here on the intraday. We are seeing this as an expanding, and then we come from push down. We didn't come from anywhere significant though, that's the only thing. There was like this little bit of hook point here, but we didn't quite tap into that fully. We then rejected, created a larger correction, pushed away, larger correction, pushed away. Are we just moving to get to this sort of liquidity area before we move, or are we genuinely just reversing? Inverting the chart, we can then see that once again, it doesn't really look like the point of area where we just reverse and go all the way to the downside. Like I said, it's possible, but we have to wait and see. So going back to the 1, we can now see that we're looking for continuation to go up. This is more of an aggressive play, and it does hold a lot of risk. So if you are positioning yourself here, definitely looking for a 3 touch, but you have to understand that this can easily just kind of get complicated, come back down to the downside, move back up. We really want to be trading when we get to these value areas, and then looking at the related pairs for entries. Bit of a different one now, because I actually put some indices on there as well, because we do have a lot of big things happening in the market for these indices. So what we'll be doing now is we'll be looking for continuation to the downside. So essentially going back to the daily, we'll see that over here where price has tapped into this higher value area here, and we came in with an expanding, we pushed up, and I'm looking for a clear push back down impulsively, ideally with a daily close. Then on the 4, we want to see that full bodied price action, ideally breaking below that ray line, pushing back into this expanding structure, then giving us continuation on the hourly, clear as day, probably clearer on the 4, but clearer on the 1, and then looking for a refinement entry within there to go short. And then we should see a lot of entries on related pairs as well to take advantage of that as well. We also have the Japanese yen 225, similar sort of situation going on here, where we are tapping into these value areas, where you can see here on the higher time frame perspective that we have this sort of 1, 2, 3 sections, scooping nature. It's kind of like mimicked itself, just a bit shorter, and now we're just kind of in that sort of extension reach. If you look here on the weekly, we do have a pretty nice candle to top that off, and I'm just wondering if this is the catalyst to begin the move to the downside. Looking at it on the daily, I am waiting to see if we can get more commitment, so a clear push below, clearing those areas, pushing back into this larger structure, and then continuation to take that range, see how aggressive it can move, you know, anticipate it, and then within there it would be probably a 4-hour continuation I'll be looking for after we get that strong push. And then we will have to wait and see, because it is quite early in the run, but there'll be an abundance of opportunity on the way down. So that's definitely one that I would be saying, keeping attention towards the Japanese related pairs, and definitely look at the JP225. Going into the top 6, we have, and if we go into the daily, we can then see that we are kind of in this intraday sort of movement where we've broken this low, we've correctively moved, we've tapped into this area, which is quite interesting, and as we kind of tapped into it, we correctively moved M-starred, where we just kind of scooped back up and then we dropped off. As we dropped off, we did push away, create a correction, and pushed away again, and then created a large correction again, which is very, very nice. Go to the 4, you can then see it in more depth. You actually have this sort of bear flag continuation on that inflection area with a clear run to the downside here. We are looking to see if we can break through these ranges, but ideally, if we look at this to this, and then we just kind of mimic that over, coincidentally it kind of just matches in here. So this does make a lot of sense to look for shorts, in my opinion, and I am looking to kind of take a continuation as a hover in this area, but I would not be surprised if this did just drop off and sell. Doesn't mean that you should FOMO and take a trade, but more so means that, you know, we have to be more strategic and more in the game with our entries. So we have to be very, very sharp to wait and be patient for an entry to come about. I am looking for a 1-hour continuation here because of the momentum that we've had. We haven't really had a clear pullback and a continuation pattern to go short. However, as I understand with a lot of these, you know, the continuation can be very tight like this as well. So this is something that I will be paying close attention towards, because something like that is very, very possible, where it doesn't seem like it could be enough, but it turns out to be more than enough. So understand that in a run of momentum, that you don't have to get these very large clear patterns like that. I mean, more so, a lot of the time we would probably look for something in this region, maybe not with that huge drop off, but let me just quickly mimic that again. So, something like this, you know, you could look for something in that site. I think it's too large for this area. I think more though, I'm just looking for a hover. Could even be retesting the back end of this, doesn't really matter, but looking for a hover to take continuation, then refine that closer, take the entry to the short. First area of interest is this one, and then if we can manage to break through it, when we reach that area, I'll be aggressive with about 3% there. So if I get tagged out, I get tagged out, is what it is. But then if we do end up pushing through impulsively and moving to the downside, wonderful, absolutely stunning, then I'm in for a great trade, and then that could really rock off from a 3% trade all the way down to a potential 10% odd trade. I'd probably be looking out for around about 8% personally. It's not necessary for me to want to be squeezing in that extra last little bit. I think 8-7 is more than enough for me, so I'm more than happy to get manually out there. Especially with this little wick here, we could get a little bit more, you know, corrective, and then create some sort of larger structure to tap into that to then move higher. Because overall, this move down has been impulse correction, and so forth. But overall, it's becoming corrective because of the amount of that. So you have to keep that in mind as well, that this could be a pivoting point as well. We may not come all the way down here, but we could come down here, pivot, come back up, and then tap into these areas before we sell again. So there's a lot of opportunity in there, especially for the counter long eventually when it does come. So that's something that you have to bear in mind to actually look at the future. Whereas the sell doesn't come, it aggressively just sells off, taps into this area. Then you have to kind of consider, are we going to look for a larger correction here? Are we looking for a reversal, and so forth? I wouldn't be looking for the immediate reversal at that low. I would wait for a solid push back up, continuation, and so forth. But these are just little points that you should keep in mind. We have CAD Yen. CAD Yen is actually more on the more favorable side for me. I do like the fact that we are coming into high value area. We have two clear bottoms, and you know, this is kind of looking like it could develop into this. And for this reason alone, what I am thinking personally is that I will look for a continuation to go higher in case that does happen, right? because that is a strong possibility. So if I go to the 4 and I see this over here, we can see that we have a strong push up. If we get continuation here, I could take that easily managed into this area here. That could be easily managed, and then into that area looking at around about 8%. But then if we do start to correctively push through it and we do go higher and higher, that could easily turn into a 20% position, and then the JP225 and everything could align, be shaped up, and then we could look for some really strong trades. But I would be more aggressive around about these areas just because we're trading in no man's land, but more than likely up to around about here I would certainly be aggressive as well. So around management when we get around here, because there's a clear target where we're definitely moving to very valuable areas. There is this small little interesting point here as well, which I would bear in mind, but you know, as we approach that area, we are looking at around about 4-ish%. Wouldn't blame you if you manually close there. I'd just say that you have a bigger move ahead of you as well. So if you close off for 4 and then it did run for like 19, you just have to understand that that is what it is. Alternatively, if we do push above and we push back down with full momentum, which is highly possible, and then we get continuation to the downside, I will be looking to position myself for a risk entry to go short and then play this overall range, and then just see it as 2 bottoms, 2 tops coming in for the 3rd bottom to then go long again. Or you know, this could turn into quite a monstrous move and actually move continually lower throughout 2024, because we are kind of at the end of the year, and what we tend to notice from time to time is when a new year starts, price then kind of comes into its new cycle, and then we tend to see a bull market, you know, throughout the year. So if you look at that for here, like January for example, we're in this bear trend, and then we come out of it around about here, but we couldn't really say that. I think more so around about here, and this is like kind of moving into 2020, and then throughout 2020, 2021, and then coming into 2022, and then 2023 we go back. So yeah, I think during it's one of those ones, but then again, I wouldn't marry those dates of years. I just understand that it would make sense on an intraday perspective to then just see this kind of decline. So let's wait and see. For now, we are correctively moving higher. This is higher risk because it still would be a part of this corrective move. So, you know, positioning yourself within that is still higher risk. But if you did take the second continuation, which would be below, I'd say that's a much more higher probability, lower risk trade, because what you've had there is you've had solid push away from the value area over here. You've had a continuation, you've had commitment from that, and then you've got another continuation, a little bit larger most probably, and then you've had that commission, and then you can take that to the next short. So there will be an abundance of opportunity, but really and truly only looking at 2 entries here, either that one or the next one. EJ is pretty sweet. So EJ, I'm looking for longs. You can see very clearly why. We can see here on the, let me just quickly check this. Yeah, you can see over here on the weekly that we have a clear 1, 2, 3, but then 1, 2, 3 is actually just hovering below this level here. So I'm just looking for this to correctively move all the way back up here. As we approach these areas, it would not be uncommon to see this impulsively move due to all that corrective pressure. There's more than enough to just have massive momentum come into the market and push price to where it needs to be. So hence the reason why I would be looking for the long on CJ as well, because if we do go long on the EJ, it's possible we could go long on CJ. And if that happens, then I can position myself strategically. Looking at the 4, we can then see that we have this clear retest of this area, the last correction on the way up. We retested it, and then we kind of just pulled back. The nice thing about this is if I go to the daily, you can see it a little bit more, is this kind of just correctively squeezed into this area, and then if you go to the 4, it makes a little bit more sense, and then you can see here that we correctively squeezed into this area, and then with a 1, 2, 3, and then as we squeezed into there, we kind of just went. And as we're going now, we're looking for 1 hour continuation, so I am looking for price to kind of tap back into this area. If we do come in there with a structured approach, I'll take the risk entry. If we don't, and we come in there very correctively, or if we come in there with an impulse, then I'll look for an insurance entry to go out. But ideally, I am looking for a structural confirmation. If we do come in there again impulsively, I would want to see 2 tops, hence even corrective. I would want to see 2 tops before taking that insurance entry. Otherwise, I'd probably just let it go. But yeah, there's a clear reference point here for the floor, so we'll have to wait and see how that performs. But it's looking good. One of my most favorited ones, which I haven't taken a trade in this in over a year, but I think I did mention it in one of my previous videos, where the last time I took a trade on platinum, I took a 4% loss. I didn't consider, because what happens sometimes is when you're taking these pairs, you need to consider the spreads, you need to consider the hours you're trading them and so forth. And I think I tend to I took the trade at the worst time possible essentially, and I didn't factor all of these in, so I learned from that. So approaching platinum again many months later, I'm fully aware of that. So how I'm going to approach this is, obviously I'm going to definitely look at the spreads leading up to it. I'm definitely going to be looking at the variability of it, the volatility and so forth. But more than likely, if we just keep it simple for what it is, we've had a solid move away from this area. If you just go back to the daily, you can see that we are in this massive range. We had a clear 1 2 3 there, push down, and then the larger structure push down. There's this area above here, somewhat less relevant. I would say this forms more relevant now, and then this becomes the bottom end of the range, and we're completing that 90% rule. Okay, so then we go to the daily, and we can see here that we had all of this. We almost got there, but we near missed it, and I think that's a very, very good observation here as well, just to understand that there was a near miss. And what we've done is we've impulsively come back down, created a continuation, and we have a clear run into the downside there, which could turn into an insane, absolutely insane trade if we can get an insurance entry in. So what I am looking for here on the 4 is, it's actually very, very simple. I'm looking for price, because we've moved impulsively on the 4 as well, and I'll show you on the 1, we moved impulsively. I just want to see it tap into this area and then reject, because it can still move to the next area of interest as well, because that was the sharp move and then the continuation here. But really and truly, this kind of started the catalyst for the move lower. That's why I'm looking at this, but it can still move higher, and it could develop into something a little bit more complex. So just to kind of cross off a lot of those variations, and just to confirm what I am looking at, I'm looking for that insurance entry, and that would confirm my thesis for this analysis, to then look for the short lower, and that would make sense, making this a more higher probability, still higher risk, but less risk, because I'm not taking the risk entry. And essentially looking for the push down, the continuation, the risk entry within it to then go lower. The risk entry being the third touch, taking it right on the end with my confirmation of my trading plan and so forth. But you know, that's basically how I'm going to be looking for it. Obviously this requires a huge amount of patience. You know, there's another entry in here which you could entertain if it's in your plan. I would have entertained this one about last year, but I took this one out of my plan, where they had the phase line. You could come up here and then go down. But then when I looked at this, and I'll just show you what I observed, to the bottom of this structure, you have a decent 7% there, right? But then even with this one to the bottom of structure, if I do get that entry, I have about 11%. But then if I'm playing the bigger move, you have this one where, oh, it looks 17%. But then if you look all the way down here, you're looking at 30%. So compare 30 to 17. They're both really good, don't get me wrong. But if you were to, you only had 1% risk you could put on the table this week, which one would you go for realistically? Would you go for the one here, or would you go for the one there? I think more than likely a lot of the time you would then gravitate towards this one, only because this one forms the risk that it could just keep doing this, and then eventually when it's ready, give you the commitment and go. So what we've done is we've basically hedged against that sort of thesis, and we've just waited for that. And that, even if the impulse is longer and we still get it further in, it's cool. I'll still do the same thing, just look for it later on, and it kind of gives me a little bit extra confluence. So the stronger the impulse we get, the better the confluence for me is. And then anyway, it just means that I might have to wait a little bit longer and wait for a larger flag or whatever, but it is what it is. Next one is EuroCAD. EuroCAD on the daily, looking pretty nice as well. I will essentially be looking at this range, and then within that range you can see here that we had the top of the range that hasn't quite been tapped into, but multiple times we came into this area, rejected. We had a strong push away, and it looks like we're going to drive into the low here. So what I'm looking at over here on the 1 is I want to see if we can complete this with 2 bottoms, come back in for the third. Within that third we get an internal structured approach. It's a lot to ask for, yes, but then we kind of meet with that reference point. We get the risk entry, we go short, we cap in around about 5%, so it's not a huge percentage there. Could probably get in out a little bit sooner, but it's probably definitely going to be around about a 5% trade for me there, and then I'll be out the market and then just wait for it to do whatever it has to do. But yeah, really and truly, this could still plummet through. It doesn't have to come all the way up here because there's more than enough. We've tested it 1, 2, 3, 4, 5 times. We've broken it every single time as well. It just seems like that didn't seem to be the one to go to. And yeah, if this goes, there's more than enough. It's just a very neutral area because we have a near miss there. This correction is very large and it doesn't technically have to go to the downside. It could still gravitate and come back up. It's unlikely, but we'll have to wait and see. But if this does push through, it could turn into a monster of a trade, and then that turns into a giant trade, and then there'll be an abundance of opportunities there. So for even if that's 15, it doesn't really matter. I still walked away with 5, and I'd be very, very happy with the 5 regardless, because I'm playing the range. Euro New Zealand. So if I just quickly go to the daily, you can see here on the daily what's happened. We had an area of interest over here, hook point, where we tapped into it with a 1, 2, 3. We rejected. We didn't quite get the full rejection. We actually retraced more than 50%, which kind of put me off the trade for a while. But then what happened over time is that if you go to the 4, you can see that we rejected. We came back, we broke the low correctively, and then we started pushing back higher again. But this time we pushed off so corrective that I was a bit confused to what's actually happening. And then when I looked at it a little bit closer, I noticed that we're retesting the back end of this, and then we're now looking to see if we can get continuation to the downside. I did want to see more commitment, but Euro New Zealand has shown to be quite messy recently, so I don't really want to get too caught up into some messy price action. So what I'm going to do is keep it very simple and go to the 1, look at this area of interest here, see if price can tap into it, push down with some aggression, give me a continuation, and then I can take that low to this first inflection area as a minimum criteria and walk away with roughly around about 9%, and then I'll be out the market and then let the market continue as is. Yeah, okay, absolutely, this could plummet and turn to 37%, but if I'm looking for a 9% trade on this personally, and then if I do manually close or get very aggressive with management, it'd definitely be these areas here between 8 to 10%. So definitely just want to point that one out. It's a stunning trade. You have to kind of see it on the higher time frame perspective, that if we're going to go, this is where we're going to go from, and this is going to be the sell, and then we're going to see that move all the way back down to here, and you could be positioned pretty well. So it's very underrated. It's a very difficult trade. I think it definitely requires a lot more experience to take a trade like this, because you can get caught into this. This could become so much. This can actually even become this, where you have something like that, and it just becomes a part of this continuation to the upside. You have to be on your A game and see the variations of what this can evolve into. And I've already mapped all of that out. I've thought about my management and so forth. So moving into the next one, which is the wild cards. Keeping it very, very simple now. US oil. Strong, looking very, very good. We have this, we've tapped into this area of interest. We're in a clear downtrend. We're moving into this area of interest here. We've had a strong push away. We had a pullback. We pushed down aggressively. We create continuation here, but we didn't quite tap into that area there. We near missed it and then sold off, and then now we're creating this larger correction, middle section over here. We go into the 4 hour. As you go into the 4 hour, you can then see that we've correctively started moving higher. We're looking for 2 things. We're looking at the override to see if we can push down, create continuation to continue going lower, or we can push up higher. We tap into the inflection area there. We push away. I'll be looking for a little bit more for further push down, to be honest, not just right there, probably around about here, and then we push up, push back down, we get continuation, and we go. And that's basically the game plan. There might be an entry in there for sure on the 15 or whatever. This is a 1 hour flag. I don't know why I displayed it on the 4, and it'll be a bit more tight than that, but yeah, that's essentially it, just looking at it like that. And I think that's more likely this one, but just understanding if we did sell off from here and we did get that, you'd understand why. Daily Aussie 200, stunning, absolutely phenomenal. If you haven't already, I urge you, just as a practice, study this. Yeah, there was some decent trades in there for sure. I'm not going to break them down in this video, but there was some really, really good trades in that run alone. So you have this area of interest over here that we're moving towards. We near missed it previously. We came down, we rejected from this area, and now we're coming back up to the high. The real interesting thing about it is we're coming in with this expanding pattern, right? Middle section coming up. We near missed it. We didn't break it. So what I'm counting on now is that we get up there, we break it, do whatever we have to do, and then we push down. The moment we break below it, start looking for continuation, go in for the shorts, and then zoom into the 1 post most probably, wait for that continuation pattern, take the risk entry, and we're in. Reduced risk entry could still be on the table as well, don't get me wrong, so I would still anticipate the reduced risk, but I'll be looking for the risk personally. And if I could squeeze it in to be as tight as, maybe I'll go 20 as maximum tightness I'll go, but most likely 25 just for the extra protection being high up and run. And yeah, that would be the run, and then I'll be looking to play that for quite a big move actually, to be honest, with scalings and so forth. So that would be my outlook for Aussie 200. Similar to the Germany 40, so right now the Germany 40 is probably my most favorited pair. You know, this is one that I have personally got a liking towards. I've taken a lot of losses on it previously, but like I said, we learn from those losses, and what we can see here is, and I think I've taken that off. Let me just, oh, no, maybe not. Okay, so if we go back to the daily, we can see here that we have this larger expanding, and then we've ended with an expanding, which is nice, pattern within a pattern. And then you can see how they're pretty much the same, you know, corrective move, long, corrective move, long, and then go to the 4, and now we're just looking for the same thing, but now we're looking to see if this gets the commitment. So I want to see the expanding complete. I don't care if we do tap into it fully, but ideally would like to. And then I would like to see a strong push down, heavy bodied, followed by continuation, ideally a 1 hour flag down here. Take the continuation with a risk entry. I would still opt for the reduced risk 100%, and then I'll be looking for that. It is higher risk, so if we did wait for the second continuation, it would be lower risk and even better. But like I said, I would still take this because it's working with a high time frame, and that would be my game plan for Germany 40. So just a clear push up, push back down below that ray line, and wait in for the trade. Let me just quickly cough. Yeah, so New Zealand yen. New Zealand yen's a bit of an interesting one, to be honest. I wouldn't get too married to this trade because we are still in that corrective squeeze, but look at this. We have a clear, obvious area that we're gravitating towards. If we look at the 4, and just bear in mind there is that little bit here of inflection that we can still react to as well. So I would bear this bit in mind as well when you are pricing your trades in, but it's still a long way away, and you have more than enough room to manage towards it. I'm looking at this as one little range here. So we have this corrective squeeze higher, it's just correctively squeezing, and then we have this sort of internal sort of corrective move coming into that trend line. And what's nice about it is we have a clear 1, 2, and then we're coming back into that reference point with a 3rd, and then we push up insurance entry and we're good to go. The reason for the insurance entry, and I think the risk entry is still good, is just because there's a lot of room here, we could kind of just drop off, push back up. There's a bit of news here as well, consumer confidence, which I think could be the catalyst to just give us that momentum. So we might see the flag further up, which is completely fine as well. So don't feel like you've missed the trade if the trade didn't shape up here, but it shapes up here, you can still take it. And that's it. Basically be managing that to the first high, then the second, and then the third, and then ultimately the higher value area. So, you know, if even to this area here, you're looking at 10, then you're looking at 16, 24, and so forth. So bear that in mind, but it's definitely looking good for New Zealand yen. And then the last two I've got is New Zealand yen, then I've got soft watch Euro USD, sorry. Now, I like New Zealand US dollar a lot more because the structure is a bit more clear and we're not trading inside and expanding like Euro USD. We have a clear near miss to this high and then obviously a near miss to that high, but doesn't necessarily have to get there because we can see that we're correctly moving away. And the DXY is looking like it is going to go in for one more long, and then seeing that as a happening, could we potentially pull back, this being the middle section, pull back, tap into this, create a clear 3-touch, and then from the 3-touch we get a push down insurance entry and we get in for the sell, and then we have a clear sort of to the 90% rule of that, a 7.45%. I'll probably get out a little bit sooner, play the range there, probably be out for 6%, and then that could go through, that could smash through, to be honest. That could really just continue going, and if the DXY starts pulling up higher, it is what it is, you know. We then see this come all the way back down, turn into a monster move and so forth. So that's something you have to bear in mind as well when you are closing off the position. But once again, I'm more than happy to come out with 6 because that gives me 6 more trades, and then I can position myself in continuations on the way down, where if that does happen to be the run, there's probably going to be an abundance of trades. Euro USD, so this is one where it's not as favorable as New Zealand US dollar, but there's still 7-ish% there. I would want to see it clear that low there and give me continuation. Right now it's just very messy. We're inside this sort of expanding sort of situation here, and right now I just can't, I couldn't really say that this is the best trade in the world, because we've pushed down, we come from a correction into another correction, and we're just moving to the downside. And with the DXY, and I'll just invert this, you can see it's very similar, you know. we are pushing to get to this value area, and then when we get there, that's when the real interesting part of this really happens. Do we get continuation to upside, or do we reject and come to the downside and get a new sequence all the way down here, which has phenomenal returns, likewise to the upside? So the real trade for me is when we get to that ray line and then how we react to it, but there could be a easy trade into there because we are trending in that direction with a clear value area target. So that's basically the game plan and the outlook for this week. Haven't really got much else to report on, but definitely hope you found value in this video. And if you have any questions or anything that didn't make sense because I was going too fast, please feel free to drop me a message. And don't forget to check the link in the description, the Notion document, which has all of the analysis here documented, so you can actually see how I'm going to be looking to take the trades and my thought process around it. And yeah, like I said, have a great week ahead, and I will catch you guys in the next video.